The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, everyone. Happy Wednesday. Welcome to another edition of Breakout Investing on TFNN. I know the programming has been a little off lately. I was out of town last Friday, so my show was dark, and show was dark also yesterday. But Wall Street is open, and we will be back on normal schedule. So I appreciate you tuning in. 877-927-6648 at the bottom of the hour, 3:30 Eastern, 12:30 Pacific. We're going to be joined by my friend, buddy, pal, Bob Lang from explosiveoptions.net. Get his take on the market, what to expect for the rest of this week. And my normal reminder that the show Breakout Investing airs daily now on TFNN from 3 to 4 Eastern. My show is available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. That is actually a pretty easy way to listen to the show. Plug those earbuds in, type in tfnn.mobi on your smartphone browser, and you can listen to the stream 24/7. All right, let's check in on the markets here. Of course, Wall Street closed Monday and Tuesday due to the destructive nature of Hurricane Sandy. Hope all my friends and listeners on the East Coast, New York, and some 15 states affected by the hurricane, hope life gets back to normal as soon as possible for you. Appreciate you tuning in and listening. Taking a look at the NASDAQ Composite. Unsettling action, isn't it? Just sitting here right at its 200-day moving average. It is down almost 15 points today, 0.5% to 29.73. Its 200-day moving average is 29.77, so it is actually slightly below this long-term support level. It's really do or die time for this index. Like to see a bounce off the 200-day moving average. If it can do that, then maybe you get a run back up to the 50-day moving average here at 30.91. But this is an index that headed into today, or I should say through Friday, which was the last day of trading, the index showed 4 higher volume declines in the past 7 trading sessions. So it's a theme that we've been talking about in recent shows. The NASDAQ Composite has been under distribution. It's a very risky environment to be trying to make money in stocks. Now, volume today compared to Friday on the NASDAQ, it's tracking pretty close to what we saw on Friday, about 1% lighter. Volume on the New York Stock Exchange tracking about 14% higher than what we saw on Friday. So let's take a look at the S&P 500 here. We'll see that this index continues to hold above this long-term support level, the 200-day moving average. Selling less intense in the S&P 500 today. It's down just a point to 1411, call it. So we're just kind of in an unsettled time in the market here. Market direction is not defined. It actually is defined. We're in a downtrend with no signs of a new uptrend yet, but these new uptrends can happen when they're least expected. In fact, if we go back to the NASDAQ Composite, we'll see that the tech index, it is still holding above its Friday intraday low of 29.61. So we are day 2 of a rally attempt for the tech index. Remember, I spent 12 years of my investing life at Investors Business Daily, learned how to identify follow-through days. I know that follow-through days or confirmations of new market uptrends aren't foolproof. They don't work all the time, but you always want to be aware when one appears. And today being day two of a rally attempt for the NASDAQ Composite, day 1 being Friday, the earliest we could see follow through for the NASDAQ would be And in fact, I'm looking at the NASDAQ 100 here. Let's look at it's really the same difference, but let's take a look at the NASDAQ composite. But it's day 2 of a rally attempt for both indices. So this is a look at the NASDAQ composite here. Day 2 of a rally attempt. That means the earliest we could see a buy signal from the NASDAQ could be as early as this Friday on the 4th day of the rally attempt. It could come next week, or we may not get one for some time. But it's just important to keep paying attention. It's easy to be very bearish right here. There are a lot of broken stock charts out there. Certainly price and volume trends, not only in the NASDAQ composite, but in the S&P 500, a bit unsettling here. So I don't think it makes sense to be overly aggressive. If you ask yourself the question as an individual investor, do you have an edge on the market? If you do, well, or if you feel like you do, maybe you're going to nibble at a stock here, nibble at a stock there. But most people I know don't really have an edge in this market, and as a result, it makes sense to be favoring cash here, waiting for a new market uptrend. That's the strategy I'm using with my Ultimate Growth Stocks model portfolio. I have a very large cash position here. I'm in the process of looking for new leadership. I sent my weekly update out yesterday with a watch list. This watch list is most likely going to become bigger and bigger in coming days and weeks, so that when we do get that buy signal, I'll have a shopping list ready of stocks that I want to buy to profit in and take advantage of a new market uptrend. But day 2 of a rally attempt for the NASDAQ composite, it's still too early. We're going to wait for that buy signal before we start nibbling at stocks again. So that's the general take on the market headed into today. The NASDAQ composite only about 6% off its recent high of 3197. S&P 500 only about 4.2% off its recent high of 1474. Taking a look at gold today. Gold for December delivery added $7, 0.4% to $1,719.10 an ounce. Gold notched its first monthly loss since May. We are at the end of the month here. Take a look at the GLD. This is the Spider Gold Trust. Broke below its 50-day moving average last week, still trading below that former support level, but the GLD today up 84 cents to 166.77. Nice earnings today from Yamana Gold, based in Canada. AUY on the New York Stock Exchange. Bullish move for this stock today in heavy volume. This is actually what a stock under accumulation looks like. You see all these blue volume bars here in stockcharts.com. Definitely a stock under accumulation, and even when it was moving sideways, holding above its 50-day simple moving average, it was under accumulation as well. So big move for Yamana today, up a little more than 7% to $20.01. You can see trading near its high for the day. Take a look at a weekly chart here for Yamana, and that's actually going to be down at the bottom here. And we'll see support at 10-week moving average for first time after recent breakout. So you can see the recent breakout for Yamana when it cleared the high on the left side of its base here. Comes down to its 10-week moving average, finds support. According to the buy rules that I espouse, this is a stock that is still within buying range here. Stock breaks out of an initial base and finds support at its 10-week moving average for the first time. It is definitely buyable. Now, if it keeps moving higher, comes down to its 10-week moving average again, finds support. There comes a time where you don't want to buy repeated support at the 10-week moving average, but for the very first time, it is acceptable. So AUY still within buying range here, even if you missed the recent breakout over 18. So stock's at 20 right now. I'm not sure that the train has completely left the station here. Crude oil today up 56 cents to 86.24 a barrel. And there's not really much happening in the oil and gas space. E&P firms, equipment firms, services companies, still seeing a lot of broken stock charts out there. But this is a name that I've mentioned before: Bonanza Creek Energy, BCEI. My friend Tom on Twitter first introduced me to this stock, but still a very strong technical pattern here. Another good watch list stock. It is outperforming today, up 4.2% to 24.71. It is on the speculative side. It has a market cap of less than $1 billion, but this is a compelling growth story here, and I think its technical picture, the strength of its technical picture, just makes it a stock worth paying attention to here. They're based in Denver, Colorado. The company has operations not only in the Rocky Mountains, but also in southern Arkansas in the mid-continent region. Again, market cap below $1 billion, but fundamentals are outstanding here. The company came public in December last year at $17 a share, last trading close to $25 a share. But let's take a look at a weekly chart for Bonanza Creek Energy, and we'll see just a really nice technical setup here. Stock is still within buying range after a recent breakout over 24.40. Distribution in the broad market has made it difficult for this one to make meaningful headway, but really like the fundamentals here. Earnings are due next week, November 8th, after the close. Earnings expected to come in at 38 cents a share, up 217% from a year ago. Sales up 115% to $27.4 million. So, speculative name, absolutely, but excellent fundamentals, excellent technicals. This is definitely one to keep an eye on in the oil and gas space. Next week, going to be very, very busy in terms of earnings in the energy sector. Whole bunch of E&P firms, oil and gas producers coming out with earnings, Transocean, RIG coming out with earnings. So very busy week of earnings next week in the oil and gas sector. A lot of healthcare names under pressure today. Why, I'm not sure, but interesting to see a lot of sellers in Biogen IDEC, BIIB. Look at this stock really breaking down, still holding above its 200-day moving average, but really down sharply today. You can see lots of distribution in this stock since late September. It is down another 2.6% today to 139.18. 139.18 last for Biogen IDEC, another former leader under a lot of selling pressure. What had we been saying for the past several weeks on this show about Alexion, a late-stage base, right? Remember Alexion Pharmaceuticals saying, hey, it keeps going up, but I'm not going to touch it because it's just a classic late-stage base. In fact, I don't know if we still, let me just check the weekly chart here for Alexion. No, that's not it. I had a weekly chart of Alexion that showed the series of bases that it broke out from when I was talking about the risks of buying a late-stage base. But boy, has this one really fallen on hard times. Since early October, I mean, this not that long ago was a $117 stock. It's now at 91, down another 4.25% today to 91.21, takes out its 200-day moving average with conviction today. So lots of problems for Alexion Pharmaceuticals. Again, healthcare under a lot of pressure today. Perrigo, PRGO, this is a generic drug maker. It is flirting with a break below its 50-day moving average here. Heavy volume, so a lot of healthcare names under pressure. I actually lowered a weighting in the model portfolio today with a big winning healthcare name in Ultimate Growth Stocks, trimmed position ahead of earnings tomorrow. So, all right, folks, headed into break number one. Don't forget Bob Lang joining me at 3:35 Eastern or so. We'll be right back, folks. Breakout Investing on TFNN.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. In about 10 minutes or so, we'll be joined by my friend and colleague Bob Lang, not only from realmoney.com, but also explosiveoptions.net. Get his take on the markets, talk to him about the upcoming jobs report and other good stuff. Let's check in on the U.S. dollar index here. At last check, it really wasn't doing a whole lot today. In Tiger TV, looking at the dollar index as of yesterday's close. I believe the dollar index did trade yesterday. It closed at 79.93. It is down another 3 ticks today to 79.90. And you can see here potential resistance at the 50-day moving average, and another resistance level up here around 80, 50, 80, 60, thereabouts. So not clear to me that the dollar index is ready to start a new uptrend yet. Hopefully that won't be the case. Personally, I'd like to see a nice little rally sometime between now and the end of the year for the stock market. If the dollar continues to strengthen, that would certainly be a headwind for stock market bulls. So yield on the money moving into the bond market quite a bit today. Let's take a look at the TLT. This is the iShares Barclays 20-plus year Treasury bond fund. It is up 97 ticks today to 123.61, up about 0.8% on the day. if you connect the recent highs of the TLT here, you'll see that it is in the process of breaking out over a descending trend line here. In fact, I think I saved a chart here. Let me go to the, here it is. And we'll see this descending trend line here, and it is now trading above that line. You can see earlier this month the TLT tried to break out, was turned away, but we'll see if these gains can hold here. So the TLT showing some decent technical action today, but overall, not too bad. Not too bad a day for the stock market. All right, I want to take a look at shares of Apple. We're talking about the major indices under some pressure here, particularly the NASDAQ Composite and the NASDAQ 100. Apple remains under selling pressure today. It is working on a 3-session losing streak here. Lots of distribution in Apple's chart. Its price action is definitely a concern for Apple bulls. I have not been keen on this stock for some time. In fact, I was, I did have Apple in the Ultimate Growth Stocks model portfolio, sold it back in late September, back up in this area here when I started to first see distribution in the stock. So Apple down another 1.1% today to 597.27. You probably heard the news that Scott Forstall, a very high-ranking executive at Apple, but also very polarizing senior vice president responsible for the iOS operating system. He is out. He is leaving the company, as is John Browett, who took over Apple's retail operations earlier this year from Ron Johnson, who is now the CEO at JCPenney. So Forstall's responsibilities are going to be split among 3 longtime Apple executives. Johnny Ive, who currently leads hardware design, will lead human interface across the company. Eddie Q, who leads internet services, will take over Siri and Maps. Obviously, there's been a big problem not only with Siri but with the Maps application in the new iOS operating system. And Fred Federighi, who runs OS X, will also lead iOS development. So management shakeup at Apple, having a negative impact. Most of what I've heard is that this is a good thing for the company. Apparently this Scott Forstall guy was involved in a power grab there. Again, a very polarizing executive at Apple. So I think Tim Cook just thought he was going to do what he saw best for Apple, but a lot of uncertainty around this stock. And while we're talking about Apple, let's take a look at Cirrus Logic, because Cirrus Logic gets about 60% or so of their revenue from Apple. They are an audio chip designer. Cirrus looking a little tired here, and with Apple looking vulnerable, it's going to be interesting to see how Cirrus trades in after hours, because it is reporting earnings, and a big quarter of growth is expected for Cirrus when it reports after the close. Look for earnings of 71 cents a share, up 115% from a year ago. Sales up 78% to $180.8 million. Again, Cirrus is very reliant on Apple for revenue. Currently about 60% of Cirrus's revenue comes from Apple. Looking a bit vulnerable here. You can see in September the stock broke below its 50-day moving average, has been trying to get back above the line, but facing some resistance here. So Cirrus looks vulnerable ahead of earnings. It is up 2.1% to 40.59 ahead of the results, but stock is looking a little tired to me. We'll see what the numbers look like after the close. Coming up next, Bob Lang from ExplosiveOptions.net. We'll be right back, folks. Ken Shreve with you. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Quick look at a couple of other movers today. Remember those great earnings from Facebook last week? Big gap up for the stock, and a lot of good news around Facebook with the earnings report. Well, the stock is working on a 3-session losing streak here, down another 4.1% today to 2103. Talk about a stock that can't get out of its own way despite a better-than-expected earnings report last week. Well, story today is they had a lockup period that expired on Monday when the market was closed, of course, and that means that employees can start selling restricted stock in the company. So Facebook, after a big earnings-inspired move last week, working on 3 straight sessions of losses here, down another 4.1% today to 2103. Taking a look at PVH, company used to be known as Phillips Van Heusen. They're just known as PVH now. Stock is up 19% today to 109.02. They are the acquiring company. Apparently this is going to be an accretive deal, but they're paying $2.9 billion to acquire Warnaco Group. That's ticker WRC on the New York Stock Exchange. PVH owns brands like Calvin Klein, Tommy Hilfiger. Warnaco has one of its brands is Speedo, but you can see shares of Warnaco having a big day today, up a little more than 38% to $70.40. All right, we're going to talk to my good friend, real money colleague, Bob Lang. Bob runs an excellent trading service at explosiveoptions.net. If options are your thing, check out explosiveoptions.net and see what Bob's trading service is all about. Bob Lang, how you doing, buddy?
I'm doing great, Ken. Always great to be with you in the afternoon. How's it been going with you?
Oh, no complaints. I enjoyed our round of golf last weekend. Do you have any thoughts or reflections on that nice day over at Simi Hills?
Well, it was a nice day weather-wise, and that's about the most positive thing I can say about that, other than the fact that you hit a couple of good putts. But it was a nice day to be out there with you playing. That's for sure.
It was a beautiful day, and of course I've been recovering from a foot injury. It's nice to get back out on the golf course for me, and it had been a little bit of an extended layoff for you. So don't get too down on your game. We'll go out again, and I'm sure those drives right down the middle, and good irons. We'll see that sooner rather than later, right?
Absolutely. I can't wait to get out there next time.
So Bob, let's talk about this market. I haven't gone over economic data this week. We had a Chicago PMI today that came in a little worse than expected at 49.9. We've got a bunch of data tomorrow. ADP employment change. It's going to show private payroll growth of 140,000. We've got the ISM manufacturing index on Thursday, and then of course Friday the jobs report, which is expected to show job growth of 125,000. From 114,000 in September. Are you kind of looking at the glass as half full here in terms of job creation? Do you think what are you looking at this Friday in terms of the employment report?
Well, it appears to me, Ken, that the scenario is probably a bit rosier in terms of the expectations than we're probably going to get. And I think if you look back at last month's jobs report, there was a lot of so-called fishiness, a lot of non-believability in that number and that report, especially with the household survey number. As you recall, Jack Welch, formerly of General Electric, came out and called the thing just a blatant lie. So I don't know whether to believe that or not. I mean that's not really my place to judge that. However, it's very possible that I'm a statistical geek when it comes to this sort of stuff. Mean reversion. We went way far in one direction last month. We could come back the other way on Friday. And look, the market has been, as you've been saying for weeks now, the market has been under very heavy distribution. And when it's under heavy distribution, it doesn't take much in terms of news to knock this market down and get people interested in selling more. Would you agree?
Yeah, absolutely. And you're talking about we had a big kind of a strange drop in the unemployment rate. I think that's what Jack Welch was talking about the last time the jobs number came out. The unemployment rate went down to 7.8% or something like that. And of course, I believe that's based on the household survey.
Correct.
So. Yeah, it's going to be interesting to see. I mean, the consensus estimate is for 125,000, but we are talking about a market under distribution here, and we'll see how the market reacts to that number. Either way, this economy is going to start having to create 200,000 plus jobs a month for things to start feeling healthy again. It still seems like we're still a long ways away from that. Would you agree with that?
Yes, I would agree with you, and at least just 150,000 a month to keep up with the rate of population growth. And then we have a very, very large segment of demographic segment in the population of baby boomers, and if those people stay in the job market, you have a much larger pool of people in the job market. The bottom line is that the unemployment rate has a very good chance or tendency to go much higher. Okay, when more people are participating in in the labor market. So, I mean, just, not trying to beat a dead horse here. I think what we're looking for over this week is probably could be a rosier scenario. I mean, look, the last 3-4 months, we've had some big companies out there announcing, layoffs, very, very large-sized layoffs, 3,000, 5,000, a couple of companies in the 5-digit 10, 15,000 range. Those things, there's a lag period with those things. Those things take time to get through the system. So, it's very possible that some of those layoffs, some of those workers are going to be feeling it right now, and that's going to be reflected in the job growth numbers this week.
Yeah, and it was either Monday or Tuesday when the market was closed where Swiss banking giant UBS, I mean, this is a company that announced up to 10,000 job cuts, mostly in London and the U.S. Look at the stock today. It's up close to 14% to 1502, and here's a company that's really, tightening its belt and announced some pretty significant layoffs. Again, it was either yesterday or Monday, but, big layoffs announced at UBS. So, Bob, when we were playing golf, we were talking about kind of overall market health and, distribution, particularly in the NASDAQ. What do you think about the chances of some sort of rally between now and the end of the year? Is it a likely scenario, especially when the election passes, whether it's Obama? It's a very tight race, obviously, between Obama and Romney. But once that layer of uncertainty gets removed from the market, what do you think about the chances for a rally between, say post-election and toward the end of the year?
Well, let me answer that. Let me answer that question second. I want to hit upon the one thing first about the uncertainty. And what I've always felt is that markets don't like uncertainty, and when there is something out there, some unknown, where the effect or the end result is a complete mystery, like this particular election or the fiscal cliff or whatever the case may be, more people, more traders, investors are likely to secure some insurance, pay for insurance, and buy some protection just in case something goes wrong. So once that uncertainty is removed, we see that fear subside and go away. So I don't know whether it's going to be Obama or Romney who's going to win this election. I really don't think it matters, and I don't really think the market cares. I mean, look, volatility right now is down about 17-18%. Okay, if there was a major fear that one of these two guys was going to wreck the economy, we certainly would see volatility starting to rise and people going for more protection. So that being the case, I really think you have to listen and pay attention to the market. So to answer your other question about a rally coming up, I think it all depends on how oversold we are with markets. We're fairly oversold right now, especially in the short term. If you look at several different metrics that I look at, we're definitely in the oversold camp. So that being said, you can't go down forever. We could certainly have a nice snapback rally, and let's use the election as an excuse for it.
So let me ask you a question. I hear the term oversold. I hear different people sort of give me different definitions of what oversold means. I mean, can you look at the CBOE volatility index, the VIX right now, which is trading around 1830. It was up around 26, 27 back in the early part of the summertime. Can you use looking at recent price and volume trends in the VIX to make that judgment that the market is oversold? I mean, what is the definition of oversold? Does it mean that a bounce is bound to happen in the near term?
Well, simply put, the volatility index, well, if you want to look at that for a minute, we're at 18-something. When the market was at its recent highs, the S&P 500 was about 1473. VIX was about 14%, about 14. So we have rallied in the VIX about 30-something% off the lows. Okay, we had an extreme reading of nearly the lows for the year on the VIX. So, we're overbought somewhat on the VIX, relatively speaking. But the thing that you're asking about is, what sort of metrics am I looking at? When we look at something like the on-off, okay, which basically measures volume and issues down versus up. Okay, when you see a reading of like a minus 100 on that particular oscillator, or minus 100 plus or 150, that's extreme short-term oversold rating. likewise, if you see it, trading if you see the NYMO or the New York McClellan Oscillator trading in the 130, 150, maybe 200 range, plus that's an overbought market. So you look at these conditions at certain points in time, and you can make a judgment call there and say, yes, we're overbought, oversold, and we're due for a bit of a bounce or a sell-off.
Gotcha. Bob, talk about your trading service. Why don't you just I have a lot of people. Options are very popular these days. I know there are a lot of new players in the options markets. I know you've got a lot of subscribers. You've got subscribers that have been in the options market for several years, and you've got others that are probably new and learning the game. You're trying to get me into options. You've been trying to get me into options forever. And, I have my growth stock newsletter, and I don't know, maybe someday I will. But talk a little bit about explosive options. What's your goal? And talk to new option subscribers, people that are just starting to learn the market. How can they benefit from the service?
Well, options give you a tremendous amount of leverage, okay, versus stocks, okay. Let's just take one example, Apple, okay. Let's say you wanted to buy 1,000 shares of Apple. That's going to cost you $600,000, right? Maybe if you margin it up, it's costing you $300,000. But still, who's got that kind of money sitting around just to buy one stock, okay? However, because with the 100-to-1 leverage you get with options, okay, you could buy 10 contracts of Apple calls, and of course with the with the great leverage, and if you're right on the direction and the time, you can make a very, very nice chunk of change percentage-wise relative to putting out that kind of money for a stock. You could put up maybe $5-6 grand, as opposed 1/1000th of the amount of money that you would put up to buy the stock. So that being the case, what we try to do is we try to help educate people, show them how to make trades the smart way. I'm very, very keen on and very, very adamant about position sizing correctly, because that's where people will blow all their money if they just put it all on one play and let it ride. I mean, this isn't Las Vegas here. I mean, there is a risk element to options trading, of course, much more than in stock trading. However, we're not trying to hit massive home runs. They happen from time to time. That's great. But you know what? We're trying to hit singles and doubles, take a little bit here and there, and it's about taking profits. Always about taking profits. You use the market as a vehicle to build your account, not the other way around. You don't just let the market tear down your account.
Still, Bob, a lot of earnings. I know you sometimes in your service you have earnings plays that you put on with explosive options. Any earnings reports after the close today, tomorrow, sometime next week? Any that you're paying attention to here?
Well, a couple of them actually tonight. I'm paying attention to Visa, which comes out tonight. This morning we saw MasterCard came out. We had a call play on that one. That one's worked out real well for us. And I'm looking at Visa, and that's probably the one that's the one I'm focused on the most right now. There's a couple of ones coming out over the next couple of weeks. Salesforce.com being one of them. I'm looking rather bearish on that one, but I'm waiting for the stock to rally. If it fails up at 150, probably going to hit that one with some put spreads. So
gotcha.
That's pretty much on my count, on my radar right now.
All right, Bob Lang, appreciate you coming on the show. Appreciate the time. And explosiveoptions.net is where you can ping Bob if you have questions about the service. And Bob, appreciate you taking the time today. We'll keep our fingers crossed for a good jobs report Friday. And congratulations on that MasterCard trade.
Thanks a lot, Ken. I really appreciate it. It's always great to be with you.
All right. Take care, buddy.
Have a great day, Ken. Thanks. Take care.
All right, yeah, I've known Bob Lang for a long time, play a lot of golf with Bob. We talk the market all the time, so check out explosiveoptions.net. Have a lot of respect for what Bob does. And when we come back, hey, we'll talk about a few more stocks. A quick segment coming up, but great to be back in the saddle. Great to have the market open again. And again, to all the people on the East Coast still in recovery mode from Hurricane Sandy, I hope life gets back to normal as soon as possible for you. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing. Checking in on the markets here. 5 minutes left to go in Wednesday's session. NASDAQ Composite down about 14 points, 0.5% to 2974, sitting right at its 200-day moving average. Less selling, I should say, in the S&P 500. Today, the benchmark index is down a fraction to 1411, and we haven't checked in on the Dow Jones Industrial Average yet. Let's do that. We'll see very limited selling pressure in the Dow today. It is down about 13 points to 13,094. With the market being closed Monday and Tuesday, today marks the first day of the Great Panther Halloween giveaway today, tomorrow, and Friday between 9 a.m. and 6 p.m. Eastern. Great Panther Silver and TFNN will be giving away a free piece of silver to a lucky listener. Today's winner for this hour, I should say, for my show, is Tom. Tom. Oh, listen to that applause. The place is going crazy. Tom in Pennsylvania. So, Tom, if you're listening, hey, you can call into Tom's show from over the next 2 hours from 4 to 6 Eastern. But we will be following up with you, and you can claim your free piece of silver. So, be sure to register on the homepage of TFNN.com for the Great Panther Silver Halloween giveaway. It's going to be going on today, tomorrow, and Friday. Happy Halloween. By the way, should be a great night in our neighborhood. We live in one of those neighborhoods where we get a lot of action. We got to have a lot of candy around. A lot of young kids live on the streets, so always look forward to Halloween. I want to take a look at shares of Baidu, because Baidu came out with earnings yesterday when the market was closed, and boy, am I hearing a lot of bearish talk around Baidu. A lot of people saying that it may not be too late to capitalize on lower prices here for Baidu. Really a stock that has been breaking down for a while, and it is down another 6.3% today to 106.64. The bottom line and the top line growth is there for Baidu, but its outlook for the fourth quarter was on the light side. So sellers in shares of Baidu today. Earnings were up 62% from a year ago to $1.39 a share. That was above the consensus estimate of $1.28. Sales were a bit light, up 52% from a year ago. Very strong growth to $994.5 million, but the consensus estimate was for revenue of $1 billion. And again, its outlook for the fourth quarter disappointed. Let's take a look at the financials, see how they're faring today. The XLF, the Financial Select Sector Spider Fund, it is still holding above its 50-day moving average here. Not a broken chart by any means. The XLF today up 0.6%, outperforming a little bit to 1589. So financials hanging in there. And let's see what else. I mentioned earnings from MasterCard. Bob Lang mentioned earnings from MasterCard earlier today. It was a so-so report. Earnings up 10% to $6.17 a share. That was above the consensus estimate of $5.93. Sales mostly in line, up 6% to $1.92 billion. Processed transactions for MasterCard jumped 24% to $8.7 billion. A slower pace than in Q2, when processed transactions grew 29%. So a little bit of deceleration there. MasterCard has a much bigger presence in Europe than Visa. So you look at a chart of MasterCard, you see a nice bounce off the 50-day moving average for MasterCard, but when you look at its weekly chart, you see an unequivocal late-stage base forming here, and I don't like late-stage bases one bit. So MasterCard not on my radar at the moment. Coming up next, the Tom O'Brien Show on TFNN, 4 to 6 Eastern. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, everyone.